Okay, good evening, everyone. We are about 1 minute to 7, so I'll just wait another 30 seconds to let people to continue streaming in. For those who have joined us, thank you so much for joining early. Yeah, and we should be able to start sharp at 7. Thank you so much. All right. Good evening, everyone. Welcome to tonight's webinar where we'll be exploring how you can make your cash work harder for you. So for a lot of you here tonight, you probably are joining us because you are currently holding a lot of cash, unsure of what to do with the excess that you may have, or you may have funds in cash management products locked up in a fixed deposit or equivalent product. Like Stashaway Simple Guarantee in Singapore, that's probably approaching maturity or have matured. So as you consider the next steps with these funds, we have always heard the old adage that cash is king. But in today's world, where the cost of living is rising, is that really true anymore? So how can we actually ensure that the value of our cash growth is faster than the rise in inflation? So while having cash on hand ready for an emergency is definitely important, investing these funds with a long-term mindset is equally, if not more important. So before we start today, first of all, thank you so much again for joining us this evening. Let me just quickly introduce these two speakers for today. So obviously there's me. My name is May. I'm part of the client experience team in Stashaway. My colleague Albert is also in this webinar. Hey Albert, how are you doing?
Hi, May. I'm doing well. Hi, everyone. Thanks for dialing in today. And I'm Albert. I'm the Deputy Country Manager here in Stashaway. And yeah, pleasure to speak to all of you tonight.
Oh, thanks, Albert. So before we get into the thick of today's topic, let's first take a look at today's agenda. So we'll start with a brief introduction of Stashaway. Then we'll talk a little bit more about why it's important for us to invest the cash that we have instead of leaving it, much of it in a low yield account. We'll also then take a high level look at ETFs. So we hear a lot about it. We kind of know how it works, but why are ETFs beneficial? At the same time, how can a diversified portfolio really help you with ensuring that you stay ahead with the rising inflation? How can we actually make our cash work smarter for us, and how can Stashaway help? And after that, we will actually do a demo on our app where I'll run through how you can create a portfolio, what some of the terms you see may mean, how you can deposit money, and how do you actually make recurring transfers in order to dollar cost average into your portfolio. And we'll also run through very high level some of the benefits of dollar cost averaging. I would highly encourage you, if possible, to follow along during the demo, which means essentially opening the app and follow the steps that I will actually be showing in order for you to really familiarize yourself. If you have any immediate questions, obviously feel free to ask them using the Q&A function button at the bottom of the Zoom screen you see. We are also streaming live on YouTube. So if you are on YouTube, feel free to use the YouTube chat box. And lastly, speaking of Q&A throughout today's session, again, if you have any questions at all, once again, use the Q&A function button at the bottom of the Zoom screen or the chat function on YouTube if you're watching us from YouTube itself. So first, let me start with a quick introduction of Stashaway. So we were founded in 2016 in Singapore, where we were the first of its kind digital wealth investment platform. So since our official launch in 2017, we have grown a lot. And I think a lot of you are also joining us from the various markets that we are present in. So after Singapore, we have expanded into 4 other geographies. So this includes Malaysia, the UAE, Hong Kong, as well as Thailand. We're licensed in all 5 jurisdictions, and we're backed by some of the biggest investors in the world, including Sequoia, Fidelity, as well as Hamilton Lane. We've also collected multiple accolades over the years, with the most recent being named one of the high growth companies in Asia Pac by Financial Times, as well as one of CNBC's top 200 global fintech companies. Over the years, we have also launched multiple products across all our platforms for our users. So what you see here on your screen is a high-level overview of everything that we offer our users across, again, our various platforms. So we do offer different products in different regions. but there is still an overlap of products. So under cash management, as you can see, the projected yields you see here are different depending on the region you're in. And we currently have the simple guaranteed portfolio, which is like fixed deposit in Singapore. So again, if you have any questions about our products or if you want any more clarity, feel free to post in the Q&A function. Using the Q&A function, our team is actually in the back end and will help us respond as we go. So before we start, we would definitely like to get to know the audience a little better. So a quick question to everyone out there. Please use the chat function to respond to this. What percentage of your current net worth is in cash solutions? So even if it's just sitting in a bank, if you're currently invested in a fixed deposit, if you're currently invested in something that is sort of like a cash management product, feel free to just share a rough number in the chat function for us to sort of get to know each other better. Okay, so we're seeing varying degrees of answers actually. Wow. Okay, so we have numbers ranging from 3%, which is great, all the way to 50%, 8 to 10%. Okay, I mean, this is actually really good. It's really nice to also understand how some of you are perhaps thinking about cash and how some of you are also thinking about maybe investing in that regard. All in FD stock investment. Very nice. I like that. Okay, so thank you so much for sharing. Yes, thank you so much for sharing. So first of all, let's start by talking about the big elephant in the room, the largest that any of us have ever seen, right? So over time, we have seen goods and services become more and more expensive. So this year, GST in Singapore was basically, it rose 9%. Earlier this month, the sales and service tax in Malaysia rose from 6 to 8%. So it's a very steep jump. And the knock-on effect from this is that our daily spend is now more expensive. What this also means is that the value of the $10 that you have has decreased. So what you used to be able to buy for $10 is no longer the same. Inflation, which is what some would argue is the cause of all this, has eroded basically the purchasing parity of cash, which has ultimately decreased our buying power. So let's visualize this, right? This chart that you see here is one that I got from Investopedia. What it shows is the decreasing value of $100 over the years. So I know this goes as far back as 1799, very, very far back. But you can see that even more recently in 2004, what you could have gotten for, if you do see my cursor here, what you could have gotten for about $1,500, you can no longer get it for $1,500. Today, you probably have to pay somewhere a little north of 2,000 for the same item. So a more, I guess, obvious example are our iPhones or phones. I think a lot of us here are on iPhones. I think a couple of years back, we didn't used to pay so much for a phone, but obviously that has changed. And that is obviously the cost of the time value of money. So if we want to look at country-specific inflation, here's a little list I have of the regions that StashAway is present in. These are actually very recent numbers. They're 2023 numbers from the IMF website. At the same time, what you see here in the brackets are the average savings rates of the bank accounts in the respective regions. These are the average rates, so excludes any sort of promotional offerings because promotional offerings have a lot of T&Cs. But as you can see, if you're not investing your cash at all, i.e. you were just keeping it in your bank account, there is no way, absolutely no way, that the growth of your savings would be able to keep up with the rising rate of inflation. You would need to put your cash into a solution that allows you to earn more than the standard inflation rate you see here on your screen. So let's look at another scenario. So assuming there is a fixed deposit product or a product with a guaranteed yield of 2.5%, which is the current rough estimated rate of a 1 month fixed deposit here, at least here in Singapore. And then there's another option for you to invest your cash in the market, which has traditionally yielded about 9% per annum if you're invested in an ETF like the S&P 500. So if an individual were to have consistently invested $1,000 each month over the course of 20 years, so for these two different products, the yellow line, which is the fixed deposit product, and the blue line, which is being invested in the market, same capital put into these two different products, at the end of it, through the magic of compounding, you will see that the return difference between the two products is close to about 350,000 over the course of 20 years. Some data to note about actually the S&P 500, right, and perhaps convince you to start investing as well, is that annually it has given back around 10%, including dividends, since its inception in 1957. So I know as new investors, it might be scary to start investing in the market because how do you know what to invest in? What are the best assets to invest in that ensures you are not taking too much speculative risk? So this is why, we always encourage our investors to consider ETFs or exchange traded funds as one of the main ways to get exposure to the market. So for example, through investing in one exchange traded fund or one ETF in the S&P 500, you gain exposure to the 500 largest companies in the US. So it also helps that through an ETF investment, you get a wide range of exposure into various companies, avoiding any sort of concentration risk. So I do have one question here for the yellow and blue graph. Does that include fees? No. So thanks for the question. So this is assuming perfect world, no fees. Obviously, with a fee element, it'll be a bit different. But yes, so our graph does not take into account any fees. Thank you for asking. All right. Let me just check in. Okay, so going back to this, there are various ETFs that you can choose from. So, right. So if you'd like one that tracks large cap companies, whether one that's managed more actively than usual, or you want an ETF that's exposed to a commodity, you'd be able to find what you want to be exposed to. And the beauty about ETF is that, say, for example, you are interested in the Japan market, but obviously for a layman like perhaps you and I, we don't know anything other than perhaps Nintendo or Uniqlo from Japan. So actually investing in a Japan ETF allows you exposure to the Japanese market without actually needing to rack your brain to make that investment decision. So I'll take a pause here for everyone to digest this and tie it back to my points of ETFs being a good way to gain exposure to multiple companies at once, while also allowing you essentially to diversify across sectors. Moving on, here are three examples of ETFs that you can invest in. So first, you have the S&P 500 ETF, and this again gives you access to close to 500 of the largest blue chip companies in the world, and this is just through one ETF. And then there is BB3M. So that's a treasury that allows you exposure to the US short-term treasuries. This allows you to take advantage of rising interest rates. So again, you know that interest rates are going up. How do you get exposure to that? You're unsure where to begin. ETFs is a good way to actually get you that sort of exposure. Another example that you see here, the third example, is an ETF that's linked to gold, which again, as the name suggests, allows you exposure to gold. So as you can see, ETFs, again, are an easy way to gain exposure to the various sectors at a much, much lower cost. And this allows you to also diversify your portfolio across sectors and assets. So if you're worried about capital, you are now actually able to get exposure to these ETFs for as low as $10 through the concept of fractional shares, where you're just basically buying a fraction of the shares instead of a full shares through platforms like us. Here's a comparison table of the difference between ETFs and mutual funds. So this is actually a question that we do get quite often. So ETFs, if you want to think about it, are kind of like mutual funds as they are also managed. The only difference is that ETFs is the exchange traded part where you can essentially buy and sell them like shares in the open market. Whereas for mutual funds, you'd have to go directly to fund managers. And also because ETFs are traded, you're actually more likely to be able to purchase or sell them at your desired price meaning the price that you actually see on your screen, or if you want to queue your order, versus mutual funds that are usually marked to market once a day, usually at the end of the day. So you would likely transact at a different price. ETFs are also liquid as they trade in the open market, while there are actively managed ETFs, majority are passive. That's why ETFs costs are much less compared to mutual funds. So what are some reasons to invest in ETFs without the fuss or complex T&Cs? Stash away is one of the primary ways, but I'll essentially let Albert walk everyone through the next section of today's webinar. So Albert, the floor is
Thank,
yours.
Thanks, May. Before I start on my piece, there's a question here, May, from the audience about ETFs, and he's asking, what does SPY, BB3M, GLD mean? The name can we find it on Stashaway, and why are there many different types of S&P 500 ETFs with different names?
Okay, so the names SPY, BB3M, and Gold are actually the names of the ETFs. You can find this on Stashaway, but we do group them into sectors. That's under flexible portfolio, but I can show that to you during the demo later on. There are different types of S&P 500 ETFs because there are different fund managers that manage. Ultimately, at the end of the day, it also comes down to there's a cost to managing all these ETFs. So at Stashaway, we actually chose the lower cost S&P 500 ETF. So I hope that answers your question. But in terms of how we can find it on Stashaway's platform, it's actually through our flexible portfolios. I can show that during the demo later on. Okay, thanks for your question.
All right, thanks, May. Okay, so from what May has presented earlier, we've seen, why is it important to save your money, but you can't just save your money. There's also inflation, right? And hence the importance of investing your money. And how can you go about investing your money is through a whole bunch of ETFs. You have, I hope from the brief presentation earlier that you have some understanding of what ETFs allow you to do, some examples of what they are and how they differ from unit trust funds out there. But some of you might be, I guess, find yourself at least new to ETFs. You might find yourself questioning, okay, what type of ETFs to invest in, right? Which one should I pick and choose? Because there could be multiple ETFs out there that does the same thing but at different efficiency. And so this is actually where Stashaway comes in with our general investing portfolio. What it is it is a portfolio that we manage on your behalf, and it aims to be intelligent, aims to be cost effective, and it aims to provide you global diversification to different asset classes. And what I mean specifically by these, next slide, May, please, is I'll start off by just giving you a quick overview of what are the different elements pertaining to this general investing portfolio. Right. So the objective here is to give you a global portfolio that's diversified, that's cost effective. We manage your risks and maximize your returns for you at the same time. I mentioned earlier, intelligent. It is powered by our own in-house asset allocation framework called ERA. We curate different ETFs out there to build your portfolio. It is low cost and there's no strings attached because there's no minimums that you need to put inside. We essentially lower the barriers to entry for all of you. So going into each one of these key points, just to kind of hammer home the point for all of you today to understand, what this general investing portfolio can help all of you. And as I do explain and go through all these points here, if any of you have questions on what I'm talking about, or even what May talked about earlier, please feel free to post your questions, and then we'll get to it afterwards. The next part, please, May. So I meant I was talking about general investing portfolios being globally diversified, right? Why do we want to have a portfolio that's diversified? We don't want to put all our eggs in one basket. I think that's quite straightforward for everyone, because we don't have that crystal ball as to what's going to happen tomorrow. We want to make sure that we are invested in different asset classes around the world, hence global. And the portfolios that we have here give you that exposure all over the world to different countries and different asset classes. And those asset classes comprise of equities, gold, bond, right? Again, hammering home the point of the importance of diversification, right? Imagine if in during COVID itself. That was if you had only two asset classes to invest in, one is gold, one is oil. At that point in time, gold did very well, like, because there was a lot of uncertainties in the market. Oil, on the other hand, went the opposite direction, right? So if you had invested everything into oil, then you would have lost a lot of money. But we don't know, how markets would perform, how prices of different asset classes would perform. Hence, in a diversified portfolio, that's where the importance of having different exposure to different asset classes where they don't necessarily move in the same direction, right? Because you don't want to over concentrate your positions itself. That's where the importance of diversification comes in, and that's where we build our portfolios to make sure that they are diversified from day one. Next slide, please, May. And I also mentioned that we these portfolios are risk managed. I think where Stashaway does things very differently from other funds out there is that we focus heavily on risk. And what I mean by that is when we offer portfolios to you, we use a risk level to quantify the risk, so that you would understand, what that means to yourself, right? Because if I came to you and I say, oh, this is a low risk portfolio, right? But low risk is pretty ambiguous, right? My understanding or my perception of low risk might be different from yours, and hence we use at Stashaway here, we use this thing called a risk index, and essentially, it's a number that runs from 6.5% to 36%. Taking the 36% extreme, for example, that is our most aggressive portfolio. And from a numbers perspective, it means that there is a 1% chance of losing more than 36% in a year. So if you put in $100, there's a 1% chance of your portfolio going below $64 or losing more than $36 in a year. So that's our way of explaining risk to you so that you can at least understand it better or get a better understanding of it from a numerical perspective. And given that we then manage that risk for you, we maximize the returns, right? For those of you who may have studied your Finance 101 in the past, we use this thing called the efficient frontier to kind of say that given a certain risk of a portfolio, we maximize the returns given a combination of assets inside. So I won't go into the details of that, but that's how we work. We focus a lot on making sure your risk is managed in the first place, and then we maximize the returns subsequently for the portfolio. Okay, next slide, please, May. Great. And intelligent, right? I think today a lot of us may not have access to investment approaches that lack that intelligence here. So what I mean by this is in Stashaway, we use our in-house framework called ERA, which stands for Economic Regime-Based Asset Allocation. On a very high level, because this can be pretty technical, but on a very high level, what it does is it looks at different economic factors. So things like growth and inflation. And based on those factors, among others, we then try to determine what is the state of today's economy. Is it where growth is very strong, inflation is low, then it's called good times, right? On the other hand, are we in a recession where growth is low and inflation is low? So by understanding where we are in each of, or by pinpointing where we are in each of these different quadrants that you see here, right? You have good times, inflationary growth, recession, and stagflation. We are then able to determine what is the most optimal assets that you should have in your portfolio during each of those economic regimes. And then obviously times will change. Developments will happen in the markets, so the economy, there could be new technological progress that drives growth, right? So you might move from one quadrant to another, and that's where the ERA framework will determine, okay, now we're moving from this quadrant, say recession, to good times, and hence your portfolio should change. So that's the intelligence behind the Stashaway ERA framework. Next.
Sorry, Albert, just to
Yeah.
sorry to cut you off. There is actually a Q&A that relates to this. So
Okay.
why don't we just address that?
Sure.
So the question is, how does Stashaway do reoptimization? And when would the next reoptimization take place?
Okay, so maybe for those of you who are hearing about reoptimization for the first time, what it means is actually a change in the constituents or what's inside your portfolio when we move from one economic regime to another economic regime. So say, given the example earlier, right? Like we're in a recession today, and then given the data that we see, it's pointing towards a good times. So a reoptimization would happen. We would, for example, the today your portfolio, which is meant for a recession, it's generally pretty defensive. You have a high degree of exposure to gold and bonds, and as we reoptimize it to a good times, then your portfolio will naturally have higher exposure to things like equities, for example. So that's kind of a very, very simple example of what a reoptimization would entail. When a reoptimization would happen, that would depend on the data that we see. I wouldn't be able to tell you today that we're going to have it's going to take place tomorrow. We do monitor the economic data that comes out globally, not only from one country or one region, but we look at it from a global perspective. And so whenever we see the data and whenever it's concrete enough for us to make for ERA to tell us that okay, now's the time to reoptimize, then obviously all of you who are invested in your portfolios will be notified that such a reoptimization will be coming. So that's the I guess the added value that we do also, right? We change the composition of the portfolio, but we also inform you that it's changing for XYZ reasons. So if you're curious to see or to understand better how reoptimizations have happened in the past, just Google reoptimization stash away, then you'll be able to see past articles that we've written about previous reoptimizations. Okay, great. Next slide. Yes, so there are many different ETFs out there in the world that's traded on different exchanges. May has given you a few examples there. What we do on Stashaway is we curate the ETFs because they are. I mentioned earlier that to the simple aim of an ETF is to track an index or a certain asset class, but they can track it at different efficiencies. So we choose the ETFs that does it the best at the lowest cost and sizable, right? Because you want to be able to go in, buy the ETF, and you want to be able to sell out of the ETF and when there's a buyer and seller on both sides of the table. So we curate ETFs, and there are different types of ETFs that track your asset classes out there. So you have equities by different countries, as you can see on the slide there. You have equities by different sectors, giving you exposure to areas such as small cap, consumer discretionary technology, so on and so forth. And there's also bonds. There's different types of bonds out there, right? There's government bonds, corporate bonds of different maturity periods, right? Some as short as 1 to 3 months, which May mentioned earlier, which is BB3M. There are much longer term bonds like 20 plus year bonds. There are different types of bonds like convertible bonds, inflation linked bonds, where the bonds pay their coupon and it's linked to inflation. There's also ETFs that give you exposure to real estate, like US REITs or even REITs outside of the US. So the beauty of what we are doing at Stashaway is that we are taking all these different, we choose the best ETFs for you, take them, put them into a portfolio. Obviously, we will not put all of the different ETFs out there. We have a universe of curated ETFs, and then we will shift the ETFs based on the economic regime that I was explaining earlier. Okay, next one. All right. So when it comes to offering a service to all of you when investing on Stashaway, we also want to reduce the barriers to entry, right? We don't want to charge you an arm and leg, which I'm sure many of you who have invested in traditional funds in the past have suffered as a result of that. And so at Stashaway, we have an annual management fee that starts at 0.8%. So it's for the initial investment amount. So depending on the country that you're investing with in Stashaway, right? Either Malaysia, Singapore, Hong Kong, Thailand, or Dubai. The tier differs, meaning like, say, for example, in Malaysia, 0.8% for the first 50,000 ringgit, which you invest with us. And then from 50 to 100,000 ringgit, it's 0.7%. So that tier, say the 50,000 part, does differ slightly from country to country, but the percentage tier, 0.8, 0.7, that is the same across all the countries which we operate in. So that's the only thing that we charge, the annual management fee. And we don't have any other sales charge that can be pretty hefty, which in the industry can range from 3 to 5%. And there's no other hidden fees that we also hide or try to make it obscure from you. So low cost. That's what we're trying to aim here, right? Because the more or the lower the cost that you pay for such services, the higher your returns. And when you compound those returns over time, it will magnify pretty significantly. All right. Next slide, May, please.
Sorry, Albert. So also
Mm,
on the topic of cost, we do have a question here that was answered in your basically in what you shared. So the individual is saying that other platforms, so he's talking about the brokerages out there, they have SEC fee, they have trading activity fee, ADR, custody fee, clearing fee, exchange fee, etc. So does this mean that Stashaway is 0.2 to 0.8, which is what we see here on the screen? We have included all this, or are the fees just for keeping money inside Stashaway? And will there be transaction fees later when one decides to sell
mm.
or liquidate the investment?
So I guess those fees that you have mentioned about custodian fees, clearing fees, those are I guess very common among when you invest through a brokerage platform outside. So on the Stashaway side, actually all of that we have taken into account the pricing of our annual management fees, and so that's the only thing I guess you have to worry about is that 0.8% to 0.2% management fee. And when you do make a withdrawal on Stashaway, there are also no fees that we impose on you. So again, it goes back to removing all that barriers to entry, right? Or we don't want to deter you from withdrawing your funds because it's meant to be. I mean, we're here to help you invest for the long term, but we do understand that in certain cases you might need to withdraw money for, say, certain life events or emergencies. So we don't want to be there to kind of hold you back from doing such thing, whilst also making sure that the service that we provide is as low cost as possible.
Yep. So also just to relate to another question that we have, which is what's the difference between buying, say, for example, the S&P 500 ETF through a broker
Yep.
versus Stashaway? So it's really the cost at the end of the day. We are, as Albert mentioned, we do want to allow and help people to invest at a much lower cost because ultimately, in the long run, your cost does add up. And that's what we are setting out to do, which is to hopefully reduce that for everyone. So really what you see here on the screen, the 0.2 to 0.8, depending on your AUM, that's really it. Nothing complex about it. Okay, moving on.
Alrighty. Next slide. So this is the last bit. I again, as part of trying to offer a service that's low cost, we don't want to put any strings attached to it, right? So if you are a fresh graduate that just entered the workforce, you don't have much money to invest, but I think it's still important to start investing your money, however little that you have, right? And hence we don't have any minimum balance that we impose on you. You can invest as little as say 10, $50 to into Stashaway, and there's no monthly requirements that we impose on you too. So you don't need to maintain a certain balance. You don't need to meet certain conditions on the general investing portfolio or Stashaway as a whole. And there's also no lock-in periods, right? Earlier I mentioned about the ease of withdrawing your money on Stashaway. So all this goes to I guess to help you at least especially for those whether you are new to investment or whether you have already been investing for a while, right? We aim to provide these general investing portfolios in a way that is very low cost, intelligent at the same time, and also easy to do, right? Because I presume majority of you here would have had the chance to, would have had the opportunity to already try out Stashaway from the Stashaway app itself. Okay, so I think that's it for this part in terms of what general investing portfolio is. I hope all of you have a better understanding of what it does and how it's able to help you. So over to you, May.
Thank you so much, Albert. Just one question, since we're on,
Mm.
general investing and ERA. There's a question from the floor. Is the ERA framework only for buying ETFs? So is it only for our ETF portfolios, or are they also for our simple suite of products, right? This
Mm.
individual is asking because they're still unclear, and we understand. So
Mm.
Albert, maybe you can also help to sort of explain a little bit about how ERA works on our platform.
Great. Okay, sure. Um, Taking multiple steps back, on our Stashaway offering there are two parts. So there's the savings part, which is Stashaway Simple, and its variants like Stashaway Simple Guaranteed. And also the other end, you have the investment part. Okay. So for Stashaway Simple, it's just simple, right? You're meant to just put money in there and earn some interest on your unused cash. But as May mentioned earlier, it's not enough, right? You have to invest it, and that's where the other side of your investment offerings come in. And for those investment offerings, there is the path that you can take, which is the more, I just choose my portfolio and leave it to Stashaway to manage. Those are typically the general investing portfolios, and those are we manage it using ERA itself. And there's the other part where you want to take a more DIY approach. So May alluded a little bit to this, called flexible portfolios, and they allow you to essentially be in the driver's seat of your own portfolio. So you are the one taking an active approach to managing your portfolios vis-a-vis the general investing portfolios which are managed by Stashaway. So that's the difference in terms of how ERA is applied to general investing portfolios versus the flexible portfolios where it's you as your own self managing what goes into the portfolio. Okay.
Yep. Thanks so much, Albert. Thank you so much for all the Q&As that are coming in. If any of you have any additional questions, please feel free to obviously post them in the Q&A chat box or the YouTube chat box if you're watching us via YouTube. So for now, we're moving on to the exciting part, which is a demonstration of our platform. I will actually be using and streaming that via actually my own personal portfolio. So just give me a moment for me to share screen from my phone. And also, as I mentioned, I would highly encourage everyone to follow along if you're able to actually switch on the app on your phone. And if you have any problems or issues setting up portfolios, please reach out to us right away via, again, the Q&A function, and our team will help you to troubleshoot as much as we can. All right, give me 1 second. Okie dokes, everyone should be able to see my screen. All right. So as I mentioned, this is my actual platform. This is what I look at every day, as does everyone here. I will run through a couple of things that's more related to that's related to basically setting up an account. Not setting up an account, setting up a portfolio. And as I mentioned, if there's any questions, please again feel free to reach out to our team in the Q&A chat box. Okay. So when we talk about general investing, we're talking about, one of our core products. So how do we actually create portfolios from this screen here? So first of all, if you see the top, there is deposit, create, learn, as well as refer. So if you click create, again, I am on the Singapore platform, you would see these two options. So let's just find it for my personal bank account that would be available in all our platforms. So in order to access our general investing by Stashaway, go to pick from a range of investment strategies. So we do have a lot of products on our platform, I understand, but Stashaway's general investing falls under pick from a range of investment strategies. Sorry, excuse me. So when you're here, you see below general investing powered by BlackRock. So general investing powered by BlackRock is we basically partnered with BlackRock, which is one of the largest fund managers in the world, to offer 4 different portfolios to our clients. And then we have general investing powered by Stashaway, and that is actually managed by our investment team. General investing powered by BlackRock is managed by BlackRock's investment team. So that is the difference between the two. General investing portfolios powered by BlackRock also offer you a broader market exposure because they have anywhere from 70 to 20 ETFs per portfolio. Whereas for Stashaway, we have less. We have about 12 to 15 ETFs per portfolio. So let's just start by creating a portfolio by Stashaway. So next, click General Investing powered by Stashaway. it should lead you to the screen. So here you would have two options, right? If you're someone who's slightly lower risk, you have less investment experience, you're a bit more conservative, then you will probably go the direction of building a core portfolio. If you're someone who has investment experience, you probably are more comfortable taking more risk, then you can go for the higher risk. So let's just go on the assumption that, you know what, I'm a little bit more conservative, I'm just starting out. So I will actually look at the core portfolio section. So here you would see a little bit more descriptions of our general investing. This toggle here, you are able to adjust the statutory risk index. So as Albert mentioned early on, we have portfolios with statutory risk index ranging from 6.5% to 36%. And what the statutory risk index means, as Albert also mentioned, is depending on what you choose, in any given year, there's probably only a 1% chance that you will lose more than the percentage shown here. So for example, if I were to decide that, you know what, I want to take the higher end, a 22% SRI portfolio, that means in any given year, there's a 1% chance that I might lose 22% of my portfolio. Meaning if I were to deposit $100 into this portfolio, there is only a 1% chance I would lose more than $22 in a given year. So if you're not comfortable with that, we will encourage you to take a lower risk portfolio. But if that's something you're comfortable with, then by all means, pick the higher risk portfolio. You'll be able to see the projection and the allocation of assets below. So if you click, for example, global equities, you would be able to see what you are actually being exposed to in the portfolio. So from here, click continue, review. So these are actually all the portfolios that you have on your platform. So the one I just created is this one, General Investing 3, Core Statutory Risk Index 22%. I'm done reviewing. It should lead you to your deposit page, and you would then be able to choose how you actually like to fund this portfolio. But let's just go back to our main platform. Assuming you had created a portfolio, you waited a few days and you decided, you know what, I'm ready to put in my first deposit. What you can do is you can actually go to the portfolio. So you see at the bottom here, General Investing 3, SRI 22. That was actually the portfolio that I had just created. You can actually choose deposit. Again, you would have two options. So you would be able to basically set up a recurring deposit from your bank account. Or if you want, you can actually just opt for a bank transfer. So we will usually encourage for you to actually set up a recurring deposit in order for you to be able to dollar cost average into your portfolio. So here you can opt to set up again a one-time deposit or a monthly deposit. So that's how you create an investment plan. Let's assume that you have funds in your your cash management account, and you're like, you know what, I want to transfer some funds into this general investment portfolio. You can do that. At the bottom, you see Home, Invest, Transfer, Insights, Learn. Click on Transfer. You can actually opt to if you see on top there, you do see deposit, transfer, withdraw. You would click transfer. You are able to set up recurring transfers from your Simple Plus. So if you are someone like myself, where you do prefer to use Simple as an alternative to your bank account, you can actually put a lump sum into Simple, and then as and when you feel like it, set up a frequency to transfer from your Simple account into your general investing account. And that is pretty much it. So there were actually some questions where someone did ask, like, are you able to see like the profit and loss? So you are. We actually do show here, if you see money weighted and time weighted return, you would actually be able to see the profit and loss. So this is a portfolio of mine, an actual portfolio. The blue line is the total value of the portfolio, and the green line is actually the deposits I've made over time. So this is actually proof of the power of compounding. Regardless of how bad the market might have been performing, I still diligently and took a very disciplined manner in my deposits into portfolios. And ultimately, that's also allowed me to sort of ride the wave of volatility. And I am a long-term investor, so this has also helped me get to where I am today in my portfolio, really. Yes, so there was also another question about how you can find the ETFs that I had mentioned earlier on. So if you actually go to create, that is actually a webinar we'll do another day for flexible portfolio, so as not to confuse both. But just very, very quickly, let me show you how you can actually find an ETF. So going back, if you were to create a portfolio again, from personal bank account, we actually, one of our newest features is the flexible portfolio. So at the bottom, you do see an option to customize a portfolio. So that essentially allows you to build a portfolio for yourself. So general investing is managed, as Albert mentioned, by our investment team as well as ERA running in the background. Flexible is actually an option that we have given our clients just for them to create their own portfolios, or if they would like to choose from some of the templated portfolios that we have actually created, you're able to. And what you can do is you can actually change the weightage of the different assets in the portfolios. So let me go back to this. Let's say I want to create a portfolio from scratch. Like I would like to be more in control of the portfolio myself. You can actually find the S&P 500 ETF here. If you scroll down, it is under US equities, and you would see the S&P 500 here. If you would like exposure to, excuse me, if you like exposure to commodities like gold, you see gold here. If you would like the exposures to BB3M that I mentioned, which is great for USD cash yield, you would see the option here. So that's how you essentially create your flexible portfolio. Again, I will not run or explain too much or go too deep into the flexible portfolios, because that's not the aim of today. Today, we would really like to run people through creating a general investing portfolio and really understanding how we can really help in your wealth building journey. Yeah, I think that's really it for the demo. Let's sort of take some questions from the floor. If anyone has any issues. With, okay, we have a lot of Q&As here.
I can take the questions, May. I can take a
Okay.
few, then I'll I guess I'll pass it on to you afterwards.
Okay, sure.
Alrighty. So first question, why is Stashaway able to maintain no lock-in period? The ETFs that we invest in, they are listed on stock exchanges. So when you it's like any company or securities that you buy on an exchange, that during the trading hours you're able to buy and sell it, and hence with that same logic, we don't impose any lock-in periods. Only that when the only thing that we have to wait for is just when the stock exchange opens, and then we can make the sell order should you want to withdraw from Stashaway. So that's how we kind of the components inside, which comprises of ETFs in the general investing portfolio, are traded on the exchange. So hence no lock-in period. The next question, I guess this is more pertaining to from the Malaysian standpoint, and this question is, how does the weaker ringgit affect Stashaway's investments as the portfolio is in US dollar? And what is the effect when the ringgit strengthens or weakens? What can one do on Stashaway to protect oneself from forex fluctuations? I guess my answer would apply actually to everyone here from the different countries that we operate in. So when we use ERA itself to make certain investment decisions, like how much weight that you should have in certain asset classes or even certain countries, we take into account the foreign exchange exposure that you have for your own country versus say US dollars, for example. And this is kind of going into the technical part of how ERA works, but maybe just giving you a very like a little taster of what it is when we make or when ERA optimizes the portfolios to determine what should go in, we take into account to make sure that you are not overly exposed to a particular currency, for example. We do in our models look at, okay, we feel there is certain in certain regimes we want to overweight on US dollar, on certain regimes we want to underweight on US dollar. We factor those things in and determine, okay, what's best. Should you have a little bit more exposure here or a little bit exposure there? So it's part of actually how ERA works itself. Can be pretty technical too, but the foreign currency movements in different regimes is something that we do take into account.
On the last bit of the question, in terms of how does one protect oneself from foreign currency fluctuations, right? I guess there's no direct way to do that other than, I guess, buying foreign currencies. So an example that we have, which helps our customers not only in Malaysia but in the other countries, is through flexible portfolios itself. And there is a template in there called USD cash yield. You may have seen it while May was talking about it earlier. And USD cash yield essentially is a portfolio that invests in 1 to 3 months US Treasury bonds. So it's not exactly fixed deposit, but it's pretty much as close as you can get to fixed deposit in US dollars, where these 1 to 3 months US Treasury bills are yielding about 5 to 5.5% in annual returns. Here, the risk is that there are two risks involved here. With any investment, know that there are risks, but with this one in particular, there are two risks, whereby the first is foreign currency risk. So, if US dollar weakens, then you do lose out. But on the flip side, if the US dollar appreciates, then you do gain from that. The other risk is the solvency of the US government. So, if they are unable to pay back their bonds, then that's the risk, right? So just be aware of going into this. Yes, the 5 to 5.5% figure in yield, it is attractive, but just be aware of the risk that's part of the portfolio itself. And that's how one way you can invest your money to kind of protect yourself from these foreign currency fluctuations. But yeah, no, just be aware of the risk. And the next question, May, do you want to take this? I can take it, but I guess you can take it too.
Sure. Which one are you looking at? Can you?
Yeah, the one on can you show the results for how our general investing portfolios perform? Yeah.
Yep. Okay. So the results, or if you're looking at our past returns, that can actually be viewed on our website. I will actually share the link with this individual. I would also like to caveat that comparing our portfolios to the S&P 500 is not it's not exactly the right comparison because the S&P 500 is mainly made up of equities. So it's extremely high risk, whereas our portfolios are actually very, very diversified. So it's a mixture of equities, commodities, fixed income, cash equivalent. So it's not really an apple-to-apple comparison, I would say, but we do have a comparison to same risk benchmarks, which you can actually find on our website. I will actually share the link with this individual because it's hard for us to really compare it to the S&P 500 just because of the difference in the underlying assets. So that's one thing. Sorry, I'm actually looking through all the Q&As. Okay, from Nagesh, I need a passive income stream, monthly income. Can you help to design something? So if you were to look, okay, perhaps it would be helpful if I were to actually share my screen again. But if you were to actually look at our flexible portfolio earlier on, we do have passive income portfolios that you would be able to sort of pick from. One second, sorry, let me just share my screen again so I can show you. All right, so to Nagesh. Okay, so if you were to go to create, to customize portfolio, so that takes you to flex. Start with a template portfolio, continue. There are passive income portfolios that you can choose from. So this is something that we've actually sort of templated and made for our users. So feel free to choose from either one of these two portfolios. They do have varying risk. So also be careful that you understand because one is definitely higher risk than the other. There are some caveats to this. So for example, the minimum dividend that needs to be in your portfolio is about $20 before you can actually withdraw. I think that varies depending on, I'm not sure where you are on Nagesh, but it depends on the platform you're on. But this is probably an option that you can try out for yourself. I'd see if that's helpful. Again, if you have questions, our team support@stashaway.com is more than happy to help out. So reach out anytime. Okay, sorry, let me just go through. Okay, can you go back to the view where it has the graph simulation and how to read it based off selecting risk percentage? I'm sorry, I don't quite understand that question, but let me just kind of go back to the graph. Okay, let's go to a general investing portfolio, okay? So this is general investing, my general investing portfolio. This is basically the assets. I believe I picked 30% for this. And this is the performance, including the total value of my deposits over time. Sorry, including like my deposits as well as basically the movement of the assets. We'd like to see the past portfolio performance. So my SRI 30, basically since we had inception of this portfolio way back when we launched in 2017, you will be able to see how the portfolio has performed. So obviously through COVID, we didn't have a very good time. And then this year equities have really gone upwards. So that's also positively affected our portfolio. Yeah, so I'm sorry, I'm not too sure if I understand your question. Perhaps if you can elaborate a little bit more, that would be helpful. Okay, let me just move on to the next one. Can you show us where to view the yield amount that can be liquidated on the screen? How much money I have that I can cash out? And is that amount after deducting fees or before? So you actually be able to see it in the current value that you see here. So I've actually masked my value. But on your own platform, you'll be able to see the current value. You can actually withdraw the full amount. Just know that what you might receive in your bank account might differ because we do have to sell the assets overnight. Again, these are US denominated assets. They are listed in the US. So we would have to sell them overnight. So there could be a price difference. So there would also be a little bit of differences between what you would see on your ad at this time and if I were to click withdraw versus what I would receive it in my bank account in the next few days. So I just do want to share that, that so that people are aware of that little difference. Okay, if we lose money through the investment process and continue to leave the money inside, when the market gets better, will we be able to recover the initial losses? Ideally, yes. That's why we also do encourage for individuals to dollar cost average in. So let me just give you an example, right? If you see my portfolio here, this is a case of me being extremely disciplined and diligent to continue my deposits in regardless of how the market has moved. So this portfolio actually comprises of the S&P 500 and Nasdaq. So I took a lot of risk with this portfolio. And obviously, since inception and since I created this portfolio, this was under flexible. The market has moved down. I've seen negative days as well, but I am investing for the long term. So what I did was I just closed one eye and I decided to continue investing in. And that ultimately has also worked to my benefit. Because with dollar cost averaging, when the market dips, I actually deposit more. That means I'm buying more of the assets at a much lower price. And that has helped me essentially make that delta or make that difference, especially when the prices swing back up. So again, this is not investment advice. This is something that I am comfortable doing for myself. I would highly encourage you to really, really understand before you make any decision as to whether or not you want to create your own portfolio, how much risk you want to take. I just hope that you understand the logic behind why we're sharing this with you. And again, if you have any questions, our team at support@stashaway.com is more than happy to walk you through. It's a very personal thing, so I would encourage you to actually reach out to our team. It's not something that I can really, or Albert and me can really answer right off the bat here tonight via this Q&A. Okay, I guess one of the last questions we have is there a plan of getting Bitcoin ETF to the flexible portfolio? We will definitely take this feedback to our investment team. The thing about crypto ETFs in general is that depending on the countries and depending on regulators, it's very hard for us to just actually offer it to retail customers. We are constantly talking to regulators. We can't promise anything, but we'll definitely, if you have any sort of feedback or suggestions for ETFs you'd like to add to the portfolios, please let us know. We would actually be more than happy to pass this question on to our investment team to also hopefully be able to provide this for all our users. Okay, so 1 minute to 8 p.m. I think it was a really, really good session tonight. So thank you so much, everyone, for joining us. We won't keep you any longer, especially for our friends who are probably fasting. Selamat berbuka. We do have a treat for everyone. So if you were to scan this QR code here, it will take you straight to the promotions page on your platform. We are actually giving everyone, especially if you haven't started, basically free management for the next 3 months. So please do scan this, make use of it. It's only valid for a certain period. If you have any questions, again, our team is available at support@stashaway.com. Yeah, I think that's it, Albert.
Well, yeah, thanks everyone for dialing in today. I hope you have learned something, in terms of how Stashaway can potentially help you, whether it's on ETFs or the general investing portfolios. As May mentioned earlier, we are here to help you. So if you have questions, feel free to write into us, support@stashaway.com, and we'll get to your questions. In any case, thank you again. And I do wish everyone good night. And for those who are celebrating the fasting period, selamat berbuka puasa.
Thank you, everyone. Good night.
Good night. Thank you.